Good morning, family. It is your boy Vine. We are back with another video. I'm going to make this quick, man. Today's video, I'm going to show you the perfect tool that I learned from ICT that I utilize to smack trades. All right, so pay attention. We're going to get straight into it, break it all down, and make sure y'all go back, always collect data. And before you even start watching the video, make sure you hit the subscribe button if you haven't already, and hit the like button. It does help us get out to more people. I really appreciate y'all. Let's get into it. So if you don't know, I already broke down this trade right here on my channel, but this trade was beautiful because I always tell you guys I look for three things: sweep of liquidity, break of supply and demand, and I look at time. And I want time to align because the session is the most important thing to me. 7 to 10 a.m. Central Standard Time is what I look for. But we also had another thing that I didn't point out, and I want to point it out today because you can use it to get smaller stops, so loss sizes on the 1 hour time frame. You can also use it for targets of liquidity in the market. So this right here, if we look at this area, all I know is when price was in these areas, and I never replay bar no more because I wanted to show y'all what happened. It was a beautiful sell. It was smooth. Everything went as planned, right? But the way I mapped this out is all the way to my left, I know that I had a daily demand zone, right? And that daily demand zone was like somewhere around here. And throughout this entire week, I wanted to get to that daily demand zone. So as you can see here, what I'm going to break down is my midnight price. And this is the thing, this is the indicator. You could use it. It is called ICT New York Open. I use this indicator every single day, and it doesn't really tell me anything besides where the market opens on the beginning of the day, 12 a.m. Eastern Standard Time. So the importance of that is because it allows me to show where the market started at, where is liquidity in the market, and potentially where these banks want to play around and play from, play to, right? Go and focus on those things. So I'm going to show you why right now. And essentially, we map out our supply zones, right? So I know I had a supply zone here. Beautiful. And then we got a advertisement. I got to pay for this. I hate paying for it. And then we get a sweep of liquidity. Now, from here, I wanted price to actually take out all this liquidity, but it didn't. It actually held everything down here, which in my case, I always ask myself, if supply isn't controlled, why is demand holding? Liquidity. Sometimes it's going to be a reversal, but more than likely, if we're pushing down like this and we got a target, a daily target, we're utilizing liquidity and building it up. So we also get a nice supply rejection candle here, and then we also get these two levels here. So this is how we get to this trade. Simple, right? Right now we're consolidating. I always teach the market does three things: consolidate, expand. Two things. The market does consolidation, or it expands in one way, trends in one way. So right now we're consolidating, expect expansion from there. After that expansion, we can reverse completely, or we can just continuate. This actually reverse continue, like as you can see, because we tapped into that daily level, but that's for another video. This midnight price, as you can see, midnight price is 2 days in here, right? And then we have the third day. Price played around those midnight prices for a reason, because there's a ton of liquidity there. So as you can see, if we mapped out this midnight price, you got a bunch of play around that level. Rejections off that level, same thing here. We go below it, come back above it, go below it, come back above it, go below it, reject from it here, and then because we had a supply zone up here with internal liquidity on the 15-minute, we were able to take this trade. Now, I took the trade like this, but I also took this trade and I got confident in this trade when one thing happened, and it happened pretty quick, but most of the time, sometimes it doesn't happen this beautifully. And we actually closed below midnight price, right? So when we closed below there, which ended up being down here, I seen it break midnight price. So I was very confident, because sometimes what happens is you'll get in sales, price will reject and just go crazy, right? But in this case, price actually closed below. So some people can enter off the closure as well, and then put your stops above that high, knowing, hey, potentially midnight price is not going to give us anything else. It's going to help us protect that level, and then we're going to continue lower. We end up targeting this level, which was beautiful. It was a beautiful, beautiful trade. And it is very, very textbook when you use midnight price. Now, another scenario way up here that I got lined up for you is we have you can show rejection or a target for future midnight price. So for example, this area was consolidated, we push up, push down, we end up taking this weak demand. I wouldn't say it was the extreme demand, but it was some significance here because it created a new high in the market, and we ended up pushing low. Now, again, if we go to the lower time frame, if you see these buy to sell wicks, we end up breaking that demand on this candle here. So technically, if you go to the lower time frame, you somebody who like to trade lower time frame, I just know what it looks like. I don't have to bounce around time frame. I just know what it looks like in my head. So what we can do is when we break that level, we can wait for price to it close below midnight price. You can get in. Simple. Right here, you can put your stops up here, and when I said you can put your stops above here, whatever. If you say, hey, I want to give myself 80 points, that's based on my risk, whatever it is. Mine's, I give myself up to like 150 because I do trade the 1 hour. But in this case, I don't remember. I didn't take this trade, so I will probably just put my stops here, just knowing that I will protect myself in those ways. But I also said midnight price could be used as a target. Well, you see yesterday's or a couple days ago midnight price, you see some liquidity down here as well. Well, instead of you trying to take all the crazy amount of trade, you can actually just say, hey, listen, I'm going to target this midnight price. It is a 1 to 1.63, but if you risk $800, you just made over $1,200 or almost $1,500 or $1,300 or so. So it's not a big deal, right? That is a clean trade. It's low hanging fruit. You don't have to be in the market and catch these monster moves all the time. The goal, you have to be profitable. To be profitable, you need to be profitable. So don't try to catch 1 to 6s, 1 to 3s, 1 to 8s. The market gives you what it gives you. Take the low hanging fruit and move along, right? Same thing here. If we were to just actually map out this level for the next day and we wanted to take a trade, well, what do we have here? Well, we tagged this midnight price. We reacted from this demand, supply showed some type of interest. Once I see this rejection of this midnight price, I can say, listen, man, I like that rejection. Something in here, either you can take it if you want, if you really risky and you want to take it off the midnight price, stops up here. Where would you target now? Well, I would probably end up start targeting these lows or the low that gave me that rejection, which would be here, because simply it's a weak high. That's liquidity. I'll actually break down that in the video soon. But you can use this midnight rejection showing, hey, listen, we rejected that level. We rejected it on both sides, as you can see. So some buyers probably got in the market here too, but it's not just for rejections. You want to play with the trend, okay? And the same example here, we have a level here that actually really quick, guys. We swept this liquidity. We come over here and we create some sort of supply. And the reason we consider that supply is because eventually we consolidated around midnight price, but then we broke this level and we show bearish intention. The next day, I'm gonna map out this level, right? And I'm gonna always protect my highs, but in this case, you have midnight price here. Well, instead of you trying to get in on a risk entry, instead of having a full confirmation and price is gone, you could potentially get, if you trade Forex, you're getting taken out. You could target this here if you want, but it's whatever, 1 to 2, 1 to 3, whatever it is. But what you can do instead of just jumping in is you can wait for these rejections, right? Wait for price to close below it, which would probably be right here. You will start to see a momentum push. You might get filled somewhere here. You can put your stops up here nice and tight, and then you can target 1 to 2, 1 to 3, whatever it is, and let price do what it do. It actually got swept, but it's besides the point. This is, if you don't take this trade, if you take this trade and you want more, then you're just being greedy. So this is how I utilize midnight price. As you can see here, we're getting 1,000 ads today. I'm gonna pay for it. I got y'all, because I never pay for trading with you, ever. I've been stopped. And what we essentially do here is we reject, right? We play around these areas, but then look, we close below the midnight price. Well, we knew we were bearish. We just swept liquidity. We took this level of demand. We come down here. Well, you can take this entry. This is in London session. So for me, I remember this day, I actually didn't get any sales because this happened in London. I'm not just gonna enter off of this. So I had to be patient, and then we end up getting a beautiful trade later in the week. So that is how you use midnight price, guys. I wanted to break this down because midnight price is amazing. I use it for targets. I use it for understanding of liquidity and consolidation in the market. I use it for targets or stop losses. Like I even put a stop loss like, hey, listen, my stop loss is gonna be at midnight price. So for example, if I wanted to take this trade and I was confident, I'm gonna say, hey, listen, I'm gonna put my stop loss like right above midnight price. I'm gonna target here because it gives a sense of, hey, once we get there, we might reject it, we might break it. I don't know, but if we break it, we're probably going up. If we reject it to the downside, then we're probably going down, right? So that's how I use midnight price. Let me know what y'all think about that in the comments. Let me know if you use midnight price. Again, here is what it looks like right here. This is all you need, right? Super simple, super simple. Beautiful. Keep it on your chart. It don't make it messy. It also cuts out each day so you know what happened yesterday, what happened today, and you can break down in the session. So I appreciate y'all, man. Make sure you hit the like button, hit the subscribe button. Let me know what you think about this in the comments, and let me know what videos y'all want to see next because I got so much more for you all. Let's get it.